According to a tweet from Donald Trump on December 31st, the Phase 1 trade deal between the US and China should be signed on January 15th. Then, on January 10th, he muddied the water somewhat, stating that the agreement could be signed shortly thereafter. The 86-page document is also yet to be released, with both sides still reportedly in the process of reviewing its text. If this lack of clarity persists as Thursday approaches, investors might start to get a bit antsy about any hold-up or conflict, potentially threatening to drag the Dow Jones further away from its recent all-time high of 29,000. Meanwhile, though tensions between the US and Iran do appear to have cooled down somewhat, the markets may still be sensitive to the situation given the gravity of what has occurred between the two nations and the admission from Iran that it accidentally shot down the Ukrainian passenger plane. It's still unclear at the moment whether there will be any further ramifications for that incident from the sort of the global international community, or whether this is the end of tensions for now, at least. It's also a fairly busy week for US figures. The highlights are inflation on Tuesday, which is set to fall from 0.3% to 0.2% month on month, and retail sales, which are expected to rise to 0.3% on Thursday. More important than all that, however, is the New Year data done from China. The latest GDP, fixed asset investment, industrial production, and retail sales readings are all released the early hours of Friday morning, likely setting the tone of trading at the end of the week. These figures tend to be real big market movers, especially if they disappoint. The fourth quarter GDP reading is expected to be 6.0%. Anything lower than that, I think, will be a real issue for the market because they're hypersensitive to any signs of a slowdown from China. Fixed asset investment, meanwhile, is expected to be at 5.2%, whilst industrial production is meant to be at 6.2%. There's more than that, though, on top of the trade agreements, geopolitical tensions and dense economic calendar, there's also the proper start of US earnings season, and that means a wave of banking updates this week. You've got Citigroup, JP Morgan and Wells Fargo on Tuesday, Goldman Sachs, BlackRock and Bank of America on Wednesday, and then Morgan Stanley on Thursday. This, as much as anything, could define how the US markets perform as the week goes on. Though, as mentioned, it's really competing with a lot of different factors for as to what will be the week's defining event, really. I think if the trade deal goes ahead as planned, then the earnings season probably will be the main mover for the Dow Jones, at least until Friday when the China figures come out. What's interesting about the trade deal situation is they're sort of probably, if the deal's signed with no incident, there's perhaps not too much upside for the Dow Jones and the rest of the US markets from that. That's probably been thoroughly priced in. However, on the flip side of that, if there is any issues, if the deal doesn't get signed this week, or if there's signs of discord between the two, or even if Donald Trump sort of says anything a bit controversial whilst the deal is being signed, or in the aftermath, if there's any sort of hint that a phase two negotiations, which there's already doubt whether those will go ahead anytime soon anyway, if there's any further doubt cast on that, that will become probably the story this week over any earnings, perhaps even over the data on Friday.